If you can really understand the force behind supply and demand, you can easily predict the financial market in a stress-free way. Hedge funds, banks, financial institutions, investors, they all make use of supply and demand. A supply and demand curve are graphically representations of the relationship between the price of a goods or services and the quantities supplied or demanded. I first go to the daily time frame to see what is happening on the daily, to see the bigger picture. This is where is the card on the 4 hour to see what's happening on the 4 hour. I marked out the leg that caused a break of structure to the upside, where my demand zone is located. This caused a break of structure here, leaving an inefficiency gap behind. So a supply and demand curves are graphical representations of the relationship between the price of a good or services and the quantity supplied. We can see a lot of demand zones here in the chart. Clear demand zones like this one. Let me mark it out here. Let me change color to green. Here you can see a clear demand zone. Market tapped in and went up a side with no hesitation. We can see a lot of clear demand zones. Look at this one here. Market tapped in ASAP and went up with no hesitation. A lot of them. Let's keep searching. Supply and demand moves the market. Here again, market tap and went up. First of all, we can see here, market created an inefficiency, went up, came down to create a liquidity, and it went up again, coming down to take out the liquidity. It came down to the liquidity and went up ASAP, took the liquidity with this leg and went up ASAP. So let's keep going. A lot of them here. This supply zone here, you can see supply zone here. Let me change the color. Market tap and went down ASAP. To touch this demand zone and went up. You can see a lot of them. A lot of inefficiency that the market expected, went up and came down again. So a lot of them. If you can understand the theory behind supply and demand zone, you can easily navigate the market with no stress, to be honest. So this is my demand zone. I might either leg that caused, this is the leg that caused the break of structure. So I'm expecting this to happen. I'm expecting this to happen on the market. Went up, came down, touched our demand zone, went up, came down and took out this liquidity here. This here is a clear liquidity. As you all know, it's a clear liquidity here. Change the color. Took out the liquidity here, as we all can see. So market must set a trap for you to fall in before going your way. That's a must. Here, this here is a clear liquidity. A clear liquidity grab, as you all can see here, a clear one. So let me mark it down. Took out this liquidity here, this here, cleared it, and the candlestick didn't close below it. As you can see, it didn't close below it, showing a clear liquidity grab here, showing a clear liquidity grab, as we all can see. So the market went up ASAP and didn't close below it. The big players they tricked everyone in buying this asset, but eventually they dropped the price down and took a lot of liquidity before going up. So I'm expecting this to happen, closing up here, coming down before we can join the ride up with them. So this is why patience is very, very important while trading the financial market. So let's continue. Anything can happen. Anything can happen. So we gotta be careful. We gotta be very careful. Anything can happen. So we switch to the 1 hour time frame to see more data on the market. To identify where we'll be entering to follow the big players to ride. Yeah, as you can see, this is the leg that caused the liquidity sweep. This is the leg here. So I'm expecting market to close above it to show a clear sign of changing of character. I want the market to close up here before coming down to this demand zone, so that we follow it up. Or to make the confirmation more stronger, to make the confirmation more stronger, you can also wait for the market to close up here, before retracing back. As we can see here, this here is a clear demand zone. So we want the market to come down here, trace back down before going up our way. So we have to switch the 15 minutes time frame to see more details about this trade. We want the market to come down here before going up, as we said. So I bring out my fib. my fib from the swing low to the swing high. Yeah. So I mark out my area, my discount zone, where I want the market to retrace down to before going up. I want the market to retrace down to my discount zone before going up. I will still cover up about premium and discount zone. That's very, very important to know. You buy at a discount zone. This is my fib extension. I bring it out. This shows me where and how I will take my profit in the market. So I mark it out. I do divide it into two. Yeah, I do divide it like this. Pick out the middle. Yeah. After that, as we can see here, this is a clear liquidity pool here. So we want the market to come down to take and sweep out the liquidity before going away. Yeah, I place my buy limits down here at this area. So I want the market to come down and take out the liquidity before going our way. Or I can still put my TP up there, but I'm not greedy. I'll go this way. Yeah. Coming back to my chart, when I came back, it went to my TP thread without even taking me in. The buy was too strong to come down more, but it didn't grab this second liquidity, but it grabbed the first liquidity. It grabbed the first liquidity here, over here, before going up. It grabbed it before going up. It didn't have a chance to come down, to retrace more down. Market will just go your way because you're not the market makers. It won't just go your way like that. It came down here before going up. It didn't have the chance to go more down here to take me or sweep out this liquidity before going my way. No, market will just respect all your analysis. That's why you have to keep eye on your trade. It's important to keep eye on your trade.